All right. Good morning, good afternoon, good evening. It is May the 21st. Let's see what kind of trouble we can get ourselves into. Let's bring up the calendar. Make sure I got it up to date. And so we're looking at a bunch of speeches. They've taken place already. We have a bill auction in 1.5 hours from now, another speech, and really that's it. Right? We really don't have much to be concerned with for our trading session. And that's the idea behind uh, waiting after the open, after the news. Right, so now if we take a look at the daily chart, we can see a lower high, lower lows, red candle. The average is 46. And we have done 31, right? Anything can happen. We could add the missing bits to the top, or we can add the missing pips to the bottom. Right, so let's go take a look inside of today using an hourly scale. And you can see the last couple hours have been bearish. So we're coming off of the high, heading towards the low. Right, so let's highlight that. Right, we have a ceiling, we have a floor, and we seem to be heading towards the floor. Okay, so if we zoom into this on a 5-minute scale, within this ceiling and this floor, you have yesterday's price action and some of today's, right? The last 24 hours or so. So we want to capture some of that just visually with your mind's eye. No special tools, just draw what you see as shelves, levels. Doesn't have to be complicated. We're not looking for precision, right? We're looking for excellence over time. And there's one more down here. Oops, I'll just copy this one. Put one where we are right now. I'm just using my eye to see, space them approximately evenly. Right, and that would be the target. Oops, sorry. The missing little bits to make up for the daily average. Right, so if we use this and assume that as we speak, we're going down the ladder, we would want to be selling green candles, which is similarly to what we were doing yesterday, right? Those of you that participated after the live session, the recommendation was to keep selling green candles. And so if you sold green candles even down here, you survived, right? Nowhere did we see 36 pips. Okay, so selling green candles would have made you money, and then in the early hours, all of your trades would have closed, just like mine tend to do over time. Right, so it's anticipating that next move. By selling green candles for the last 16 hours, you would have made money in the last couple of hours. Right, so let's see what we can get ourselves into now, right? Is it going to go down, or is it going to find some kind of support and go up? Right, I'm looking at this. I can see lower highs, I can see lower lows, I can see it in the midst of a pullback. I want to play the pullback on the short side, right? So I want to sell green candles like I did yesterday. Right, so I'm going to sell right there. Let's go grab a box while I'm here. I'll copy yesterday's box. Let's measure there, 9 pips, 60 bars. Assume this is a low. put the box on the swing low. Better yet, let's just go do some investigating, right? Let's put the box on that low and see where we broke out right here. So let's put a new box on that break. The market gave us almost 2 boxes and has then retraced 1 box and a little bit. And we are selling green candles, looking for this to continue. All right, so if this is a top for now, a high, let's call it a high, we can measure our way down 2 standard deviations. Right, so we're looking to finish this current leg, this current leg somewhere around here. So we want to be selling the green on our way down. I can remove this, remove that. So if we're wrong, we're going to end up selling in this box and then maybe the next 3 more. Or, yeah, 1, 2, 3. Right, so we'll know, right? If it's not going down, it must be going up. And so we have to choose where to close, right? You don't have to fight 4 boxes worth. You can choose to take a loss. And then if you think it's going the other way, go the other way. Right? This is just to show what the market is capable of doing, 1 box at a time, more or less. These are just spares that I'm waiting to use. And if it pushes up a little bit more here, I'll sell a little bit more. There we go. So that's 2. Let me unmute speakers. There we go. I'll sell a 3rd one. So now I have 3 in this lower box. This is officially my box number 1. So now we're in my box number 2. Look at it this way. If I relocate this box and I assume this might be a bottom, I have this space here to put a 4th click. And this would still be box number 1. So I'll take a 4th click right there. All right, so now I have 4 trades officially in 1 box. So that's my box number 1. This is where I start to, stack my risk. If I choose to fight from this space here, I'm allowed 3 more boxes. Right? If I choose to lose and maybe reverse everything, the cheapest place to do that is in this space here. And then it buys me this amount if that's where it's going. Right? It affords me the way up. So let's just see what happens next, right? We're butting heads into resistance right here, which was support. For these current candles, this is now resistance. And the expectations is that we'll be making lower lows, right? Kind of cool to sell right on the edge, right at here in this zone here. So planning ahead, planning ahead, maybe we can sell more. All right, so box number 2 has 4 clicks in it. And so let's plan ahead where those 4 clicks may end up having to go. Let's put one more here. Maybe one more there. And now we use a little bit of patience. So 4 clicks per box is about 1% per box. That's kind of what you're aiming for. You take that 1% and you break it up into 4 or 5 pieces. And then you let the price action show you how to spend your 4 or 5 pieces, right? So that you're spreading that 1% in this box. So instead of trying to be perfect with the entry, you could be a little bit off the mark with the entry, right? You're trading a probability 4 different times. And then the average of the 4 probabilities ends up making you money, right? We're just thinking ahead where the money will go, right? So if I put clicks in this area here, my average price, which is this white dotted line, would move up with every click that I put on. And that average line becomes my next target, right? I need to cross this line to start making money. That's where my targets are. Right. So if the price moves against me, I'm allowed 1 more percent to fix the original 1%. Right. It's like a repair process. And there's only so many times that you can do this, right? The thing with martingaling is it assumes the trade is closed and you've booked the loss. And with martingaling, the assumption is that you would open a second trade twice as big as the original loser. We're not doing that here, right? We're taking the same amount of risk evenly throughout. And by the time we're done, we've allocated the same amount that we're willing to allocate each and every single day. It's rare that we end up in all 4 boxes, right? So it's rare that the allocation gets used up. Typically, we spend our day in 1 or 2 boxes, right? So, but we're ready to go all the way to 4 if we must, right? So it's a process that needs to unfold. And if it doesn't go that deep, it doesn't go that deep. So what? Right? Nowhere here is there martingaling taking place. It's actually referred to as anti-martingale, right? Because by the time I'm done building this position, I've added to my winners, right? Each click will end up making me 3 pips if the plan works. Right, so here we are at resistance. I'll take a 5th click there because I can actually afford it. Okay, 5 up to 33. That's kind of what we're looking for. That's kind of what we're looking for. Right. All euro trades, 100% euro trades. All history, about 2,000 trades, 45, 43 losers. Right. Making pips is not a problem. Giving them back is the issue for most people. And this is why I, professed leave the casino if you can. On schedule is better, right? So operate as a business, right? Right here, we want to take a trade. That'd be one of five. Right? I'm going to put a fifth right there. Right, 4 or 5 clicks per box. Right? It's this allocation of the risk. Instead of taking one trade and relying on that one trade's outcome, I'm using the same amount of risk in percent, but I'm choosing to spread it over time. And then as a result, it's the next move that cleans up the slate. There's really nothing on the squawk today. There's very little news coming through. The next speech is not until an hour and a half from now. All right, the potential exists that it finds a way higher, and we'll be participating as sellers. Right, so as people assume it's going higher and higher and higher, we'll sell it to them, because our assumption comes from the top down, and from the top down, we're making lower lows, we're making lower highs from the top. All right, and we are building this candle 1 minute at a time. Right, so the approach that I have is that I'm not here for the whole candle. Right, I'm not here for 1,440 minutes. I'm hoping to be here for less than 120. And preferably they're all in the same direction. And so I'm kind of determining which way is most likely. And then the process kind of leads me to clicking on one side versus the other. Right? And that decision then leads me to discover if I'm right or wrong over time, right? So I build a position with the next move in mind. If that next move never comes, I may have been wrong all day. Like I may have been building 4 boxes worth of risk, and it goes into box 5, 6, 7, 8, 9, 10. Right? It keeps going. That's the unlikely event, right? That's what we're here for, to stop that from unfolding in front of us, right? You don't allow it to take place. You do your job. And that's the tough part, right? Booking that loss. That's when you're going to feel revengeful and brain freeze. Right, so are we going to close a couple of winners here? Box number 1. I did not open any trades here because it never reached that level I was looking for. Slow and steady. There's number 1 for the day. Took about 20 minutes, 18 minutes. See if we can recycle this by revisiting the high. All right, so if we come back up here or the top of the box, something like this. We can keep that going. Green candle. I'm back down to 4. I want my 5th. I'll take it right there. All right, so as always, it's a repeat of the same process, right? It's not the result that drives us. It really is the process. We're just here as monks to do the same tasks every day. We're just not quite sure what the tasks will be until we do the top-down analysis. And then we're faced with, today's job, and we reach into our tool bag. We only have limited tools. It's the same tools. And with those tools, we have to deal with whatever we encounter, right? So today's task plus today's problems in one toolbox. And the toolbox is not filled with imaginary stuff. It's only got money and some skills in it, right? You have to fill your toolbox with the skills and the money to implement the skills with. If you don't know how to fix issues, like if you don't know how to fix problems, you're going to keep making them, and eventually they're going to lead to your demise. Right? Learn to repair screw ups. Better yet, don't make them in the first place. Right? That's the game of excellence we're in for. Right? But if you do happen to paint yourself in the corner, it's nice to know how to undo it. And this is what we do with 4 boxes. Right? Standard move should be within 3 boxes, and that 4th box allows you space to get out. Like it's a last resort, it's a target at break even. It changes the behavior of the trader, right? The 3rd and 4th box are trying to fix boxes 1 and 2, right? They're not trying to make money. Right? If we get up here, it affords me clicks that I otherwise don't spend. Right? Pacing myself. With their light calendar, today may end up just like yesterday. Very, very low volatility. Hence, the daily average range is shrinking. A month ago, an ADR was 70 pips, and today's ADR is 45 or 50. So we have to be cautious of expectations that are out of this world. Like Mr. Market, please give me 200. I'm willing to lose 100. In reality, you're not willing to lose a penny. And the market can't give you 200, not today, anyways. And so between now and then, you're going to do all sorts of crazy things. And, maybe interfere with may have been a good trade. So if we go up here, it entitles me to click number 1 in box number 2. Right? And all the clicks are looking for the same thing, right? A move in the bearish direction. Always the same. Whoops. We're just trying to find where this begins. Is it going to start here, right? Is it going to start here? This next leg is going to start somewhere. And our job is to try and find where that was. Or is. And then when we find it, when it begins, when it does start, all our trades get paid. right? And then because we don't touch the target, right? Our target is always the same. It's always paying the same amount, right? Every click I make is $1 in my pocket. And that happens to be about 98% of the time. Right? So with that expectation or expectancy, I can buy a new dishwasher. And, I can know exactly how many clicks I need to pay off my dishwasher. Right? And I can tune that. If I put more money in the account, I can scale up. Right? It's everything is measured, and everything I have in front of me is in my control. The market is a river of opportunity, and it offers me a challenge that I'm up for. The tools that I have allow me to filter the information and exploit or extract 3 pips consistently. Right. The minute I have expectations that are beyond 10, 12 pips, one box, it starts to fall apart very quickly. Right? Between now and then, a lot can happen. I aim for consistency, not really for the amount of money. Over time, compounding will take care of that. And over time, small, tiny trades afford me a 20-year career, right? By trading micro lots and mini lots, I don't intend of blowing up by the Friday. Likewise with leverage, right? Leverage in this account is 100 to 1. Never would I use more than 100 to 1 for anything. It's like the rope the broker gives you to hang yourself with. You want as little rope as possible, and then you want to learn how to use it to not hang yourself with it. So are we going to get a second, third, fourth, fifth trade here in a few minutes? It's really boring when things are slow like this. The average bar between 8 and 10 mountain time is about 3 pips. And lately it's not even been 1.5 pips. That's a problem. It feels like summer a month and a half early. Right? But remain steadfast. We have a good plan. We have a good strategy. The market uses time to get under our skin. Right? So it understands that the more it wastes time doing this kind of stuff, the weaker hands will just fall off, right? The loose leaves will just fall off. Stick to your plan. And then the ejection seat serves a purpose, right? If you must eject, you don't have to close all the trades. Let it close whatever it needs to close, right? Preferably, you're taking care of that before it even gets there. All right, so that's called a long tail stop. And we're protecting ourselves for long tail on the daily candle, not intraday like what we're doing here. Right? We will be in front of our computer watching it go here. You have 4 boxes to choose what to do before it gets there. And if you're convinced that you still want to play in the same direction, box number 5 is where hedging comes in. And that's one of a kind of skill. Like not going to teach this on YouTube. I'll do it if I have to, but I'm not going to sit here and start answering the question. Right? There's a specific process to hedge in and hedge out. And hedging is a process. Basically, it's a subroutine, right? So it's like a loop within a loop. And we have to understand that it's all about closing losers. Once you're in the hedge, you're not making money anymore unless you target that specifically. But it's all about removing the losing side, right? The objective changes and the risk just doubled, right? So 2 cans of worms everywhere, twice the difficulty, twice the costs, twice everything. It's just sometimes not worth the effort. That's why I said if you're in box number 4 and you're adamant that you're absolutely right and you just need a little bit of space, therefore hedging might be the thing, right? It's the last tool in the toolbox and it's the one tool we don't like using. Right? It's like using a butter knife to take off a flathead screw. Right? It destroys things. It just buys us time. It's a pause button for drawdown. The drawdown still has to be dealt with. I'm anxious to see gold go down. I want to buy it lower. It's not going anywhere. 24, 28. Right? Slow. It's like watching molasses. It's so slow. Pour. 31 of 47. Right, so from the time we started drawing the ladder, we've been hanging around the same couple of rungs and really haven't gone anywhere. Right? But it does give us a clue, right? Unable to go to the higher rung. And instead, we've been coming back down looking to maybe target this one. Right? So we can see one step at a time without having to envision too far into the future. It's like we're forcing ourselves to put blinders on. Those of you that are in the community, in the Ecofin group, if you go to the right hand side of the app under the team pin board, I'm pretty sure I posted an exercise in there a while ago to practice hedging. Yeah, actually, there it is. I see it. Yeah, I posted it. I think it was in May or October of last year. Yeah, check the team pin board. You'll see a couple of exercises there. Stuff you can do in a demo account. candle. The bars are just so tiny. No volatility today at all. What's the NASDAQ look like? Curious to see what NAS looks like. Good. Come on. If you have a click to spare, now would be a good place for it. All right, we've passed the bottom of the hour. And this is usually when our pullback slash stops or starts, right? It depends on what's been happening leading into this moment. Let's see what comes next. There's box number 2, entitling me to some clicks.
According to Interfax, Russian Defense Ministry says Russia has started the first phase of tactical nuclear weapon drills.
Whoa, that's cool. There's one trade in box number 2. Okay, stay short. And when we look at the dollar index, which we should do every day, I look at the dollar index on the 4-hour right here. We can see it coming off, sorry, the moving average. It tested it earlier today. This, I think, was right in front of Canadian news. Yields are coming off. Right, the dollar is likely going to follow the yield, or sorry, the dollar index is likely going to follow the yield. Which that's something that I keep an eye on. And then it kind of leads the way. The dollar index is kind of trapped between a rock and a hard place. So until it makes its move, the euro is just drifting. They're still dealing with divergence between the central banks, right? Lagarde is thinking about cutting rates in June. Powell's not in the same position. It's all going to come into play a lot faster than you can blink an eye. A lot faster than you think. So I'm building for something like this. Right? And if I'm wrong, I'm willing to keep participating. Oops, this is the wrong size. There's another. All right, so you can see the white line moving up. If we go to the next level inside the box here, I'll open one more. This money is allocated to this task. Right? The intent is to see each one of these trades turn around and pay 3 pips. So theoretically, I'm adding to a winner. It's like building a grid. I'm only building half the grid. Right, looking left, or sorry, on the right, but looking left, I can see we're approaching resistance. So that's why I'm kind of waiting to see if I need click number 3 and click number 4. Right, the goal remains the same, right? I'm just building a short position because we just don't know how much more of this there is. Right, so it all hinges on my top-down analysis, right? My bias, and then because I expect a pullback, I'm building in a pullback with my bias in mind. And ultimately, I'm looking for a move something like this over time, right? So over time, it should rotate and go back down. I just don't know where that is. And that's the idea, right? We're looking at one box at a time and letting the price within the box tell us the facts, right? Here's another entry. I'm jumping the gun here because I want to put the clicks in. And so now I have 3 clicks in box number 2, 8 clicks in total, right? So I'm floating $30, $28 out of a $13,000 account. I'm not looking to make big money. I just want to be consistently putting something into the account every day and lose as little as possible. Right? So by leaving the casino after I book my anticipated wins, I don't give them back to the casino. We play for the next move. People forget that, right? It's going up right now, but it's not going to the moon. Right? So by measuring what's happening right now and comparing it with what an average move should be, I can kind of anticipate where the end of this should be or could be. And then from here, I'm more than willing to be wrong. Right. And so that's kind of the idea. We know where things kind of fall apart. Right? The plan is no longer valid. So until box 5, until I'm thinking maybe about hedging, it's part of the plan, but it's not instituted, right? It's not, a lot of it has to do on conviction. Or, I guess, discretion. We're just measuring the current move so that we can compare with an average and anticipate where the next move might come in. That's kind of the recipe. Where we're doing this with futures, you have to limit yourself to 1 box, maybe 2 boxes, depending on the money that you have. And it's really because of first in, first out, and so on and so forth. You don't really want to average in the way that I'm doing. And you cannot have to rely on precision with your entry. Right? You can still have an upside down risk to reward ratio, but you don't want 18-1 like I'm doing here because I have micro lots. Right? I have space. Using leverage buys me space. I'm using 100-to-1 leverage. And so I can use tiny, tiny, tiny positions, which buys me space. And within space, I can do the job that I need to do. I can find the next move. It's a matter of time. People want to get into the trade and make money right away. I want to get into the trade and make money when it's time. When the time's right, the price will move. Don't worry. And that's how they get under our skin, right? They don't tell you when the time's right. They just do it. And if it looks really, really good for the crowd, it's very likely how they're going to hurt the crowd, right? It looks too good to be true. When everybody sees the same thing, it's very likely going to do the opposite. It's just a probability. And even here, everybody sees the same thing. Everybody sees lower highs, lower lows. And how far will they keep pushing it? How far will they keep pushing? Will they make a higher high? By using time of day and that circadian rhythm that's kind of built into this industry, 3 shifts per day, we can understand who's at the wheel and what do they have to do next. They're on the clock. They have a job to do and they all want to go home.
JP Morgan CEO Diamond says, I'm not expecting a stock split in the foreseeable future.
We're going to get paid here. Let's start to get paid. We've postponed gratification long enough. We've been at this 45 minutes. Come on. Yeah, we were right back to where we were yesterday. The non-event. This hurts a lot of trend traders, right? The events from actually last year, this year, the lack of a trend, the lack of direction is chopping a lot of people up into bits and false breaks every day. The false break has to be addressed. You have to look for one. It's almost illusion number one. It's that first illusion they try to pull every day. Right? So depending on which session you operate, look for a false move before the real move. Right? We're still looking to turn this red and go back down here. See if it goes back down the ladder, in which case it would start to pay us off. Right? If we adjust the boxes, assume this is a high, put one box there. No, maybe it's coming here. Right? There's no for sure here. There's no certainty here. There we are. If it pushes back up, I'll take that trade back. I'll put it back on. And that one too. The objective has not changed. We want to sell green candles. Right? We want to sell when stuff is expensive. Oh, there's one. I just put both clicks on there. I'm keeping the last two for up here. If you have a click to spare, take it there. Right. And just to make sure, remind everybody, I'm just some dude on the internet, right? I have really no clue what I'm talking about. I just show you how I do it. Don't take this like financial advice. This is just show and tell. You're taking all the risks. Oh, we gotta put one there. I'll put it. Trading the probability. So now I have one left for this box number 2. And then I'm willing, able to spend here and up there. let's see. 5 minutes. We have the London fix or so. What's today's date? 21st. We got a week. We have a week to go before month end. Messages everywhere. The goal remains the same, right? We want to finish lower. This lack of volatility is really annoying. It is getting under my skin. Come on, come on. We're right in the middle of the day. Right in the middle of the day. If we go there, we want to sell. By the time we get there, they'll be 36 pips away. If we go to the bottom, oh, that's also 4 boxes away. So it's kind of 50-50. The destination is to be determined. I think our port of call is at the bottom. We've been at this for about an hour. We've closed 3 winning trades. And we've built a position with 9 more. That's a total of 12 clicks. Doesn't take long. Once you get the momentum of this, once you get the the routine, the behavior sorted out, you're now relying on compounding, right? You're just showing up for consistency. Make that daily deposit in the account. Let compounding take care of things. You don't have to deposit a lot, just deposit consistently. This is why you see me quit after a couple hours. We don't need 18 hours. There you go, Logan. That's exactly yeah, that's it. Leave the casino, 0.5%. Right.
US to sell $80 billion in 4-week bills on May 23rd to settle on May 28th.
What do we have coming next? I think we have the speech, 9:45. So 45 minutes. We have Fed Bar speaking. Yep. I'll see how many people get hurt today. Anti-martingale. Should look it up. Everybody surviving okay out there? We don't want to fall in the trap. They open the door, they put, they put bait in there, they make it look really, really attractive. A lot of people, fall into the trap and then they close the door shut. So it's really about watching it unfold and then having a playbook to decipher what's happening. Like, oh, I've seen this a million times. Slow and steady. I still have one click to spend in this box. And gold is making a move higher. $24.33. That's so precious. Precious metals. Can't beat that stuff, man. Come on, Euro. Do your thing. Holy. Normal volatility would have us finished by now. All these expectations, broken dreams. We remain short, undisturbed. There we go. There we go. We need more like this. All right. At this rate, we'll be lucky if we get to close these trades before the bottom of the hour. So maybe we'll call that the end of the recording right here, where you guys all know what to do. All right, we want to remain short. We want to let these trades close and recycle them along the way down. Right? Understanding that if things keep going up, at some point, being wrong might be the right thing to do, right? There's nothing wrong with taking losses, right? So we just don't want to move the stop loss, right? Don't touch it. Just see if your trades close by themselves. All right, and I'll see you guys tomorrow, same time, same purpose. Okay, enjoy, trade safe, everyone. Bye-bye.